Hello, everyone. This is Daniel Neesmith, President of Security First Asset Management. Hope everyone's week is off to a great start. It has been a wet beginning to the week, especially folks in Macon. I know a lot of you were without power. We had issues at our office yesterday in Macon. We were without power for most of the day. Luckily, the power is on now. And so I hope everyone has a better rest of your week. So I just wanted to touch base about what's going on with the market and the economy and also about our upcoming events. We have one of the most highly anticipated events coming up at the end of April, which is the food truck and shred event. We're going to have tacos and some good Mexican food, and also our shred truck from Shred Monster will be out from 4 to 6 p.m. April the 27th. So go ahead and put that on your calendar. That's Thursday, April 27th. April 13th, we're going to have a self-defense class with a very wonderful lady. She's going to be talking about how to defend yourself, give some techniques about how to defend yourself in case of any altercations or anything like that where you can have good self-defense, but it's for men and women. And as you know, last week the markets were volatile, and the reason is the Fed decided to go ahead and raise interest rates again, 25 basis points, in the face of the bank failures. Unfortunately, rising rates has caused some weaknesses in the banking sector with regional banks. And we think this is a trend that's likely to continue. It's had a negative impact on the markets. It may eventually slow or cause the Fed to slow the rate rise that they currently have. The target for federal funds looking at the end of the year, most people think it's going to be at 5.1% in December of 2023. So I don't think the Fed is done raising interest rates unless there is some real weakness exposed in the banking sector due to the rising rates that may slow the course of the rising rates. So folks are concerned, and we have very little exposure to the banking sector. I think our only position in the portfolio is Morgan Stanley, and so far they have been able to weather the storm because most of their revenues, a lot of them come from uh, revenue coming from portfolio management, not just from making loans. So you want to be careful owning bank stocks, especially if you own regional or smaller banks. They're the ones that are feeling the sting the most. And we think that we're going to see more growth later in the year. Hopefully, we see that the forecasts are right. In the fourth quarter of this year, we see the strongest corporate profits. Until then, we remain on defense, and our moderate risk portfolios held at Pershing. We have between 35 and 40% in the money market, which is currently yielding over 4%. And if you have assets at AssetMark, we have about 40% in cash and money market there as well. So remember, you have a financial plan. We're managing your downside risk in your portfolios. And most of our clients have principal protected index annuities where we're having higher than normal interest rates help those returns right now. So if you have any questions, please reach out to us, and we hope to see you at one of our upcoming events. Have a great week.